So today we're going to have some fun doing this, and I want to show you guys how to go from transaction to trial balance. All right, so we're going to be covering quickly steps 1 to 4 of the accounting cycle. Regardless if you're in Form 4 or if you're in Form 5, this should be a nice refresher for you, right? Because at this point in time, whether you're in Form 4 or you're in Form 5, you should have covered step 1 to 4 of the accounting cycle. Okay, so if it is January exams you're getting ready for, or end of term test, or even June exams, this could be a really nice refresher for you. It's a crash course, so guys, it's going to be quick, right? It's not going to be as detailed as our live classes or even our pre-recorded classes, because it's supposed to be quick to help you just go through the cycle fast. Okay, pick up whatever you may have missed during your classes, or probably learn something new, right? So this is the accounting cycle I have on the screen. I have step 1 to 6. Some books have step 1 to 5. However, I've noticed that CSEC or CXC, they ask a lot for the 6 steps, right? So some of the books, they compile or they aggregate or they put together step 4 and step 5 as one step. But again, I've seen CXC ask many times for the 6 steps, and these are the 6 steps that they ask for. Okay, so step 1 looks at collecting source documents. Step 2 is recording any books of original entry. Step 3 says post in the ledgers. Step 4 is to prepare a trial balance, and that's where we're going to have a little pit stop today. Step 5, make adjustments and closing entries. Step 6, prepare and interpret financial statements. And then you go all over again, right? Because it is a cycle. So while we wait for a few other persons to jump on, let's have some fun with these multiple choice questions. What I want you guys to do is to type the answers in the chat. So put 1, whatever your answer is, 2, whatever your answer is, 3, whatever your answer is. You can put it in one message. I'll prefer it if you put it in one message for me. So let's have some fun with this while we wait for other persons to jump on. Number 1, the sale of goods on credit would be recorded as B. You debit in the debtors account and you credit in your sales account. If you got that, give yourself a nice round of applause. Mr. Brown bought goods from a supplier, but he was undercharged for goods. Which document should the supplier send him? They should send him a debit note, right? And why? Because they now have to debit his account again to bring it up to what it should have been. The withdrawal of money for personal use affects A, the drawings account and the cash account. It's not going to affect purchases and it's not going to affect stock, right? So we have B for 1, D for 2, and A for number 3. Okay, so we had some fun there while other persons came on. If you have any questions, feel free to leave it in the chat. So what we'll be covering today, we're going to cover the purpose of accounting, steps in the accounting cycle, the 7 books of original entry. We will look at double entry a bit because that's a real problem for a lot of students, and how and what to post to the ledger. All right, so we're moving quickly. We're going to do 2 40-minute sessions. After the first 40 minutes, you guys could take a 15 minutes break because it is going to be intense. So take that 15 minutes to breathe, take a little walk outside, drink some water, use the bathroom, and come back. Just click the same link and you will be back on the Zoom call when that 15 minutes up, right? The replay will be available for only people who stay to the end. And there's also a nice little bonus that will be available for persons who stay to the end. So if you know your friend's supposed to be on this call and they are not, send them a WhatsApp or send them an email and let them know we are on, and they should be on as well. So one of the things I've realized is that sometimes we get the more technical stuff and we miss the simple stuff, right? So I want to just touch on what is POA, what is accounting, because I see a lot of multiple choice questions and they ask you what is accounting and what is what is bookkeeping, and some of those the simpler questions that you would expect people to get, that's the one that they get wrong, right? So what is POA? POA is a good place to start. It's a good starting point if you want to have a career in accounting and finance. It's an amazing foundation, right? It is an introduction to the underlying principles, rules, guidelines, or concepts which guides accountants in the preparation of accounts and financial statements. So it is an introduction. It's a good place to start. It's an amazing foundation, right? What is accounting? Accounting is the recording, selecting, classifying, and summarizing of financial data in ways which provide stakeholders with useful information to help them assess performance and plan for future activities. Now they ask this a lot in multiple choice. They will give you a few different options and ask you to choose which one is the right definition for accounting, right? So don't sleep on this. And just in case you miss what the purpose of accounting is in this whole long definition, right? Let me point out to you what the purpose is. The purpose of accounting is to provide the owners of businesses and others. So before I said stakeholders, and now I'm saying the owners of businesses and others, because they are the stakeholders, if you didn't know what a stakeholder is, right? So it's to provide stakeholders with useful information to help them assess performance and plan for the future. This is the purpose below here. Look for my cursor moving, and to the top is a compilation of the definition and the purpose in one. Bookkeeping is only the recording aspect of accounting. So if you look closely, you would realize accounting is the recording, selecting, classifying, and summarizing. Bookkeeping is just the first part of accounting. All right, so we're moving along. In order for us to provide the useful information that the stakeholders need, we can't do any old crazy thing. We can't just do whatever we want to do. There are particular processes, there are particular sequence of events that we should follow, right? And the sequence of events and processes which is followed and repeated in order to prepare a business's accounting records is called the accounting cycle. This is another key term that you guys should take note of. If you have your workbook, you will see some spaces that are blank. It is for you to write in the information from what I'm sharing with you now. If you miss anything, as I said, the replay will be available for those of you who stay to the end. So you could take the time to look over the video and make the notes in your workbook. The term cycle is used because the sequence of activities is continuous. So if you're in business for 10 years you will do the cycle. If you're doing it yearly, some businesses will do this quarterly, monthly, every 6 months is a cycle that they have to repeat over and over and over. Okay? So we're looking at step number 1 of the accounting cycle right now. So we're going to jump into source documents. What are source documents? In the multiple choice questions we did while we were waiting for some persons to come on, one of the questions asks, what document should be sent to Mr. Brown? Those documents that are listed, those are source documents. A source document is a document which provides information from which accounts can be prepared. To say it in another way, source documents provide evidence that a particular transaction occurred. What are they used for? Source documents are used to record in the books of original entry. Let me just go back up. You see step 1 is to collect the source documents. Step 2 is record in the books of original entry. We will take some of the information from the source documents and record it in our books of original entry. Right, so we're connecting the 2 dots there. The source documents, we don't just collect source documents for collecting source documents' sake. There's a purpose for us collecting the source documents. And that is for us to record in the books of original entry. So what are some types of source documents? We have purchase invoice, sales invoice. These 2 we get either when we purchase or when we sell. So a purchase invoice, you get that when you purchase something. A sales invoice, you get that when you issue that when somebody buy from you. And I'm saying you because I like to tie the accountant together with the business because they're a team, right? You're working for the business, so you become part of the business. Credit notes, these are source documents used when you return goods. So whether you return goods to your supplier or your customers return goods to you, you're going to issue or collect a credit note. Debit notes, these are used so when there's an undercharge of an invoice, right? Things happen. Sometimes people make mistakes, and it happens. So that's what you use a debit note for. Receipts, when you collect money from somebody, you issue a receipt. Petty cash vouchers, a lot of businesses have what they call petty cash, and this is where they have a certain amount of money kept for small purchases. So instead of writing 100 different checks, they will write one check for $500, have that $500 in the on the business premises, and then if it's $20 for fuel, $20 or $50 for paper for the machine, they will just pull from that $500. So every time they issue money from the petty cash, whoever is in charge of the money must fill out a petty cash voucher. And whoever is receiving the money must sign the petty cash voucher, right? Pay-in slips. This is something you get when you deposit money into your bank account. They give you a slip. Bank statements, that should be easy to understand, but it's a document that your bank will send you every month to show you all the activities that occurred during the month. Till rolls, these are what you would see when, let's say somebody have a computerized system in their business and they're cashing those white papers with the black writing and stuff. That is called a till roll. It records all the sales or all the cash sales for the day or sometimes for the month, depending on how persons will, they call it a batch. So sometimes people will batch every day. They will pull out all the till rolls and look at what their records is. Delivery notes, these are, again, source documents or documents that somebody would get when they deliver an item, especially to a warehouse. Or in instances where you don't want the person to see what the price of something is, they give you a delivery note. And the invoice will be sent to the accounting department. All right, so source documents. If you get a multiple choice and they ask you which one of the following are source documents, you guys should be able to pick it out now that you know what source documents are. All right, so I didn't just give you those questions there for those information there just for giving information's sake, right? I'm a person, I really don't like to waste time. So I gave you that information because a lot of times question comes and you have to be able to analyze what source documents are used and how to apply the information. So let's look at the question to the top right, where it says Rishi owns a wholesale business. He had the following transactions in January 2013. They give you some dates and then they give you some information for each day. So on the 4th, he received an invoice from Premier Electrics for goods valued at $960. Stop and let's process what that means. If he received an invoice, that means that he would have purchased goods. Okay, so the invoice, there's the source documents. The source document, they give us an invoice number. That's going to be important, right? He, on the 10th, issued an invoice. So he would have sell goods to who? Haven retailers. For how much money? $650. He received a credit note on the 11th. So that means that he would have returned goods to his supplier, which in this case is M&H Electrics. Right? So you see how understanding what the source documents are and what they are used for can help you when you have to do a question. Because sometimes they will give you a list like this, and then they will tell you, prepare the relevant books of original entry. If you know he received an invoice and you understand what an invoice does, okay, you know that has to go in his purchases. Yeah, that would have to go in your purchases book. If he issued a credit note, that means that a customer brought back goods to his business. So sometimes they will tell you, like to the bottom in pink here, you will see prepare his purchases book, sales book, returns, outwards, etc., etc. But on the top, they said prepare the relevant books of original entry. So sometimes they will not tell you which books to prepare, and you have to know. Other times they will be lenient and they will be nice, and they will give you something like what I have in pink here. They will actually tell you what books to prepare, but you still have to know which transaction relates to what book. All right. On the right-hand side, underneath the question marks, we have some multiple choice questions. And the one to the top says, which source document should be used when preparing a sales book? So they give us some source documents and we have to choose which one should be used. Are we going to use a credit note? Are we going to use a delivery note? Are we going to use an invoice? Or are we going to use the till roll? The other multiple choice question here says, which source document should be used for making debit entries in a cash book? So if we're going to make debit entries in a cash book, that means we will have received cash. Which one of these source documents will be used when we receive cash? So the answer for the first one would be sales book would be an invoice, because we would have sold goods. And we issue a sales invoice when we sell goods, right? The second one, the answer would be, who want to take a guess? You guys want to take a guess in the chat room? Yes, the answer is E. I told you just now, when you have, sometimes you'll go to a business and you would see they have a computerized system and they will print a bill for you. Instead of writing out a bill, they would print it on a little black kind of printer, right? That white paper is called a till roll. So when they print that for you, they also have the machine record the sale, and then at the end of the day or the end of the week, they print out everything and it will come out on one long roll and they will see what is the total sales that they made. Right? So till rolls, whenever you get cash in a business, you'll have a till roll, and you can also have a cash receipt, depending on the business. If the business is not as computerized, the person will actually have to write out a receipt for you. Check counterfoils, those are, if you guys ever see a checkbook, when you rip out the part which the person has the cash, there's a little stub that remains in the cash book. That part that remains in the cash book is called a check counterfoil. Right? So when you actually pay somebody, you're going to use the check counterfoil to record in your book of original entry. The pay-in slip is when you put the money into your bank account. The invoice is either when you sell on credit or in this case, right? You give somebody an invoice when you sell on credit or when you purchase on credit. We spoke about a receipt before. Sometimes we see people using invoices also when they do cash sales, but for POA, know that an invoice is used for credit sales or credit purchases. Okay, so step 2, we into step 2. What are books of original entry? Remember, I told you guys moving along quickly, right? In the second half of the session, we're going to actually look at a question. So I'm going to give you the theory now. We're going to look at the question a little later on. If we do the question without doing the theory, it's not going to make much sense to some persons. So what are books of original entry? They are sometimes called journal or day books, right? So don't mix them up. They are the same thing. They are books used to summarize important financial details shown on a wide range of source documents. So you're going to have one book now where you're going to record all your purchases, all your sales, all your return outwards or inwards, all your petty cash information, all your cash transactions, and also all the other things that don't fall into the other books. In business, you go into business to make money, but you're going to have a lot of transactions that transpire. If that will help you make money. So you have to purchase, you have to sell, etc., etc. And that could come up to a whole lot. You could end up with a whole stack of papers, a whole stack of invoices, a whole file of, petty cash vouchers, right? So when we go to our books of original entry, we simplify all this information, probably to one page sometimes. And the head accountant now will come take that information and post it to their ledgers. So instead of them having to come, by the way, senior accountants, they charge a lot and they get paid well. So you really want to not keep them too long in your business, right? So instead of them having to go through tons of source documents to try and figure out what happened when, the junior accountants pull the information from the source documents, record it on one sheet of paper or on one page in your book of original entry for the senior or the for the accountant, right? Sometimes you can have one person doing both the collecting of your source documents, entering into the record, entering into the books of original entry, and then posting to the ledgers. But sometimes and generally you would have more than one person in an accounting department doing different things. Okay, so books of original entries are books used to summarize important financial data shown on a wide range of source documents. They are also used to provide details required to prepare the ledger account, and they also list financial details in date order, making it easy to trace important information. That's very important. With your books of original entry, everything must be entered in order, date order. So put your source documents in order first and then start entering it into your books of original entry. All right, as much as possible. Sometimes they can miss something and it entered out of place, but as much as possible, it should be entered in order so that it's easy to track. It's easy to pick up any type of fraud and that kind of thing. So there you have what are books of original entry. It sounds like really complicated, but it's just a book that I use to summarize all the different source documents and all the different sales and purchases, right? Books of original entry. We have purchases book, which is used to record credit purchases of goods for resale. Goods for resale is the same thing as in inventory or stock, because you buy inventory to resell, right? So it's goods for resale. You have a sales book that is used to record credit sales of goods. Return outwards book, returns of goods previously purchased on credit. So if you buy something on credit and you're returning it, you have to record that in your return outwards book. Return inwards book, return of goods previously sold on credit. You sell something to a customer on credit, they bring back part of it for whatever reason, it has to be recorded in a return inwards book. The cash book records receipts and payments affecting cash in hand, which is cash on your premises, and cash at the bank. And you can have both a 2-column or a 3-column cash book. Petty cash book is used to record cash payments of small values. And then you have a general journal, which is used to record everything that cannot go in any one of these 5 books. So that is for transactions which it would not be appropriate to record in the other books. Example, sale of a sale or purchase of a non-current asset will go into your general journal, because your purchases book is only for credit purchases of goods for resale, not cash purchases, not cash sales. Your sales book is not for cash sales, right? That's a common mistake, guys. So this is a huge exam tip. Don't put cash sales or cash purchases in your sales or your purchases book. Okay? All right. So we're going to look at step 3. But before I go into step 3, if you are interested in more detailed information about any one of these steps, you guys can become a member of the Accounting Academy, where you get pre-recorded videos of the live classes where we go in depth into each one of the particular steps, right? So If you think we're going a little bit fast and you need a little bit more information about any one of these steps, feel free to email us at learn@taa@gmail.com and let me know you're interested in the pre-recorded classes, which you could look at anytime. You can look at it how many times you want to look at it. Yeah, so that's an option if you think that we're going a little bit fast, you want some more information, as well as you can also join our live classes. Okay, all right. What is a ledger and what is a ledger account, right? So these words sound so fancy, but a ledger account is a table which records transactions affecting a particular aspect of a business financial activities. It's also called a T account. Why? Because the simplified table looks like a T. So a ledger account is a table which records transactions affecting one particular part. So in one table, you would have all the rent information. In another table, you would have all the wages information. In another table, you would have all the motor vehicle information, right? So it's generally just a table. We have this simplified ledger account down here, which a lot of persons are familiar with, right? So look for the cursor moving, the simple T account, but also spend some time doing questions with the ledger account with all the lines, as people just say. You have your date, details, folio, etc. Right? So when we come back, we will jump into that.